Welcome. Today we're looking at some really quite promising shifts happening in how cryptocurrency is being regulated.
Mhm.
It feels like we're maybe moving towards a more defined, perhaps more supportive environment for digital assets.
Absolutely. It feels that way. There are some, significant proposals on the table now, new leadership at the SEC, and it signals a real change, I think, in how they're approaching
The
governance.
change in approach.
Yeah, suggesting an adaptability that, well, it could be really beneficial for the whole space.
Exactly. So for anyone involved in crypto, or maybe you're just curious about where it's all heading, understanding these potential changes is pretty crucial.
It really is.
Could unlock quite a bit of innovation, perhaps. We're going to focus on some key areas like how new crypto assets actually come into being, how they're kept secure custody, and the rules for trading them.
And it's important, I think, for you to understand that even within the regulatory world, there isn't just one single view, right? There are different ideas on the best way forward, especially with exciting new stuff like tokenization.
Right, different perspectives even within the SEC.
Exactly. Makes for a really interesting and I'd say important discussion.
Okay, so let's get into this new regulatory mindset then. It sounds like there's a feeling that things are, well, evolving for the better.
There is, yeah. The SEC chair has signaled quite clearly an intention to move forward with a fresh perspective, moving away from some of the, let's say, less effective approaches of the past.
Less effective how? Like
Yeah.
the shoot first, ask questions later kind of vibe some people felt?
Sort of, yeah. The sentiment seems to be that previous methods maybe weren't really addressing the unique challenges and also the opportunities that this technology presents,
Yeah.
maybe burying their heads a bit, some might say.
Right, okay. So the feeling was maybe things were a bit too reactive, not always providing clear guidance for people trying to innovate responsibly.
That sums it up pretty well.
And the aim now, it seems, is to establish, what are they calling them? Clear rules of the road.
Precisely. Clear rules of the road for crypto assets. And this shift, it really acknowledges that the traditional regulatory structures, the ones designed decades ago for stocks and bonds,
Yeah, they don't always fit.
they don't always translate well to blockchain technology.
Mm-mm.
And that mismatch, well, it's created a lot of uncertainty. So these new proposals aim to provide that much needed clarity for businesses.
Okay, clarity is key. Now,
Mm.
one area that seems really central to these proposed reforms is how crypto assets are held. The custody issue. Why is that such a critical point?
Custody. Yeah, secure custody of digital assets is, well, it's a major focus. It's a huge hurdle. There's been considerable discussion around previous guidance, like something called SAB 121.
SAB 121, right. I remember hearing criticisms of that. What was the issue there? Confusing.
Well, the criticism was that it wasn't entirely clear, maybe even a bit of a mistake in how it was structured. It led to complications for institutions wanting to offer custody. For instance, it essentially required them to put the crypto they held for customers onto their own balance sheets.
Oof. That sounds like a big accounting headache.
It had significant financial implications,
Yeah.
definitely. So there's a push now for updated rules.
Okay, so it sounds like there's maybe a move towards recognizing that the technology itself, blockchain, can offer pretty robust security, maybe with self-custody being an example.
Exactly. There seems to be a growing recognition that under the right conditions, with proper safeguards, individuals and entities directly managing their own digital assets, self-custody can actually be a very secure approach.
Interesting. So proposals are actually being considered for that.
Yes. Proposals that would allow, say, investment advisors and funds to self-custody their assets, provided, of course, they meet specific security standards and procedural requirements.
Okay.
This could definitely offer more flexibility and potentially lower costs compared to using third-party custodians for everything.
Yeah, that would be a really notable shift from how things often work now. And it also sounds like maybe there's a realization that the traditional framework for outfits like broker-dealers maybe
Well,
isn't a perfect fit here.
that's right. There's definitely an indication that exploring alternatives to that traditional broker-dealer model is on the table. Something perhaps more specifically designed for the unique nature of digital assets and how they're actually traded.
Something more tailored.
More tailored, yeah. Could lead to more effective regulatory oversight in the end.
Okay, let's switch gears a bit. Let's talk about how crypto assets are actually traded. Sounds like there's an effort to modernize the rules for crypto trading platforms too. What kind of updates are we talking about?
Well, the goal seems to be bringing the regulations, up to speed with how crypto assets are actually exchanged today.
Uh,
One idea being floated is to allow platforms to handle a wider variety of digital assets.
Wider variety, like securities and non-securities together.
Potentially, yes,
Yeah.
regardless of their specific classification.
Yeah.
This could, in theory, create more integrated and efficient trading environments for users.
That makes a lot of sense, actually, because sometimes those lines, between what's a security and what isn't in crypto, they can feel a bit blurry.
They certainly can.
And I also saw something about updating rules for alternative trading systems, ATSs.
Yes, exactly. There's a proposal to potentially revise the rules for ATSs, keeping the specific characteristics of digital assets in mind.
Remind us quickly, what's an ATS in simple terms?
Sure. In traditional finance, ATSs are basically trading venues that aren't registered as full national securities exchanges. Think dark pools, some electronic networks. So updating these rules could provide a clearer regulatory path for digital asset trading platforms to operate, maybe within a modified version of that existing framework.
Got it. So adapting existing structures.
Adapting, yes. But importantly, there also seems to be a keen awareness about avoiding unintentionally pushing innovation in businesses offshore, outside the U.S.
Ah, yes. The competitiveness angle. I saw the phrase smart regulatory exemptions mentioned.
Precisely. That's the idea. Finding ways to ensure the U.S. stays competitive in this, rapidly evolving global landscape. It's about striking that balance, isn't it?
The classic.
Between safeguarding investors, which is crucial, and encouraging innovation to actually happen and flourish here.
Right. Okay. Now, when we look at newer technologies built on this, like tokenization,
Yeah.
it sounds like we see some, quite different perspectives emerging even within the SEC.
We do. It gets really interesting here. On one hand, you have a perhaps more, let's say, measured or cautious approach being voiced.
Okay. What are the main concerns or considerations from that side when it comes to tokenization?
Well, the cautious view tends to emphasize that while tokenization, putting real-world assets on a blockchain holds a lot of promise, it's a concept that can be interpreted in different ways.
How so?
Well, its application needs really careful thought. There's a call for clear definitions. Are we just talking about creating a digital wrapper for an existing asset, like a share of stock or a bond? Or does tokenization represent something fundamentally new, entirely new trading systems, new forms of ownership?
That seems like a really important distinction to make, actually.
It is. And this perspective also stresses the need for, thorough testing, demonstrable real-world value, not just getting caught up in the market hype or the excitement around the tech itself.
So substance over style, making sure it actually does something useful.
Exactly. The focus is on ensuring these advancements are robust, that they provide genuine benefits, and aren't just, creating new complex ways for speculation without real underlying utility. And underpinning all this caution is, of course, the SEC's fundamental job.
Investor protection.
Protecting all investors. Regardless of how fancy or technologically sophisticated the investment might seem, ensuring everyone understands the fundamentals.
Makes sense. But then there's also a more optimistic view on tokenization, isn't there? What are the potential upsides being highlighted?
Oh, definitely. The optimistic view sees tokenization as potentially a really powerful tool for boosting market efficiency. Dramatically, perhaps.
How would that work?
Well, the idea is that by using smart contracts and creating these digital representations of assets on a blockchain, we could achieve things like greater liquidity, much faster settlement times.
Instant settlement, maybe?
Potentially getting closer to that, yes. And more streamlined processes for a whole range of assets. Think about things like fractional ownership of, say, real estate becoming much easier, or complex financial transactions being automated securely through code.
Right, you can see the appeal there. More efficient, maybe more accessible markets.
That's the potential being highlighted. Increased efficiency, improved liquidity, broader access.
So it really sounds like these different viewpoints are just a natural part of the process, right?
Yeah.
Figuring out how best to integrate such a, potentially transformative technology into the existing financial world.
Absolutely. It really underscores that while there's this general positive momentum towards providing clearer regulation overall, the specific ways that regulation should tackle cutting-edge innovations like tokenization, that's still very much being actively discussed, debated, and evaluated. It's not set in stone yet.
Okay, so if we were to sort of wrap this up, it genuinely feels like we are seeing some positive momentum building towards establishing more well-defined regulatory frameworks for the crypto space. Finally, maybe.
Yes, I think that's fair to say. The apparent commitment to creating clearer guidelines for how digital assets are issued, how they're custodied safely, how they're traded, it does represent a potentially significant step forward for the industry, a move towards maturity.
And it's important for you listening to remember that there are these various viewpoints bubbling up on the best way forward, especially when we talk about the newer tech like tokenization.
Mm.
It's clearly a dynamic area. The conversation is absolutely ongoing.
Precisely. Which I think brings up a really interesting point for you to consider yourself. With these potential regulatory shifts sort of taking shape and the continued development of these powerful technologies like tokenization, what opportunities, or perhaps what challenges, do you personally anticipate seeing in the future of digital assets?
Yeah, that's a great question to leave folks with.
It really is a fascinating intersection, isn't it? Innovation, technology, and that constant need for a secure, trustworthy financial environment for everyone. Finding that balance.